What's up? I'm Dan Fredenberg. This is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. Front of a house. It's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is we're seeing more properties like this being built. Let's do some stuff. Talk to you later. Bye.
Today I'm with Brian Hemedinger. Is that right?
That is correct, Dan. Brian Hemedinger.
All right, nice. I already got there. So this show here is I'm interviewing different commercial real estate investors. I'm finding out what their motivation is and the role that they take in a co-GP situation. But I find that any kind of success, any kind of progress, professionally, career-wise, or wealth-wise, you have to be able to introduce yourself effectively. So, Brian, could you please introduce yourself for the audience?
Yeah, absolutely. So I'm Brian Hemedinger. I'm a sales leader, I'm a coach, and I'm a multifamily investor. Live here in Los Angeles, and I work for an upscale fitness company where I oversee sales for about 22 locations. Got into real estate seriously about a year ago and have been focused specifically on multifamily in growth markets and specifically on the capital raising side of the business.
Mm-hmm. All right, good stuff. So yeah, we already have a lot of the most important answers. So let's go through the motivations first then. So I'll scoot over here a little bit. So I call it, why do you want to be part of an apartment complex deal? And below I've got the 6 different roles. But the problem is, especially beginners, they don't really know what role they'll take in a GP, like co-GP situation, but everybody knows what their motivations are. So here are the 5. The first one is to preserve your purchasing power. Basically, you're concerned about inflation. You want to make sure that you're at least in the same spot or better tomorrow that you are in today. The next one is my personal one, which is trading time for wealth is what I'm after. I realize as a high earner in tech that I could just get a great big salary and then pay income tax on that great big salary and then invest in this long-term wealth and cash flow. Or if I actually get into the apartment complex business, then I'm trading my time directly for wealth and skipping that step. The next reason is because people want to fast track retirement. The main difference between those two is that if you have a goal of retirement, then you know where you're going to, pull the ripcord or whatever, the parachute. And basically it also implies that you got something going on, you're not working with zero, maybe you can start off with an LP position, or, maybe you want to focus on co-GPing, but basically you want to educate yourself and make sure that you're doing the best with your money that you can. So that's why they want a part of an apartment complex deal. The next one is for the people who are just bonkers ambitious, and basically they want to buy their entire hometown. They want to have a huge, skyscraper with their name on it or something like that. And the benefit, of course, to most GPs in this situation is we know that the person will work their butt off, and they're not going to get to the point where, they're making like 70, 90K a year. And they're just like, what, I'm comfy, that's just not who they are. And the last one is if they have some sort of separate from just straight money need to help a particular sector of society, or, like maybe it has to do with animals or something like that. But it's not just directly just, profitability. They have some sort of irrational need to help a certain group of people. So out of those 5, how would you describe, what's your combination of motivations? What are your primary motivations, Brian?
I would say trading time for wealth is the most accurate description. And for me, I actually love what I do in my regular job as well. However, I recognized that there are limitations to that. meaning I rely on that income. I rely on that job. And without that, I don't have much freedom. And so the motivation for me is to build another income stream that then allows me the freedom of choice, the choice to do what I want to do. And I'm a coach too. And one of the things I love to do is coach. And with that, to be able to build an income stream with real estate to help other people get involved so they can ultimately fund the lifestyle that they want to live, and then focus on coaching to ultimately help people build the life they want to live. That to me is the ultimate combination that I think will give me the most fulfillment. I don't ever see myself really retiring because I love so much about what I do, but to have the freedom of choice to do what I want to do, when I want to do it, with whom I want to do it, that's really what is most appealing to me.
It makes lots of sense. It goes along very closely with Warren Buffett's quote about how, basically if you're working, if you're trading your time for money, you're going to work till you die. You have to have some sort of wealth if you're going to get out of that whole rat race, I suppose. But speaking of rat race, let's talk about the roles in the actual apartment complex deals. So I'm going to start with the one that most closely reflects me, which is a repositioner. One of the big things about repositioners is they have to be strong in underwriting skills, because the term repositioner means that they take this property that already exists, they find another way to present it or do something with it so that it makes more money for the owners of the portfolio than it currently is. The magic term they use is highest and best use. So if it's not at its highest and best use, the repositioner will realize it, and through their underwriting, they'll figure out if this is a good price point to enter in on, or if they should go on to the next deal instead. But if you're a repositioner like me that's from the internet, then you need an operations person. You need somebody to take care of the day-to-day, because I'm not going to be unclogging the toilets, even though I have no problem with unclogging toilets, I should mention. But somebody needs to be there to do that, collect rents, or you can also rely on somebody. Like I have a side of what I do, which is helping automate the operations just because of my tech skills. But the other thing too that you'll see is there's a bunch of Benjamins going down this toilet, and that's to emphasize that the bookkeeping is part of the operations, and the marketing, making sure that you have low vacancy. That's the operations part. And so if you think that your operations team is better than just about anybody else who's out there, a repositioner, that might be enough. When it's not the hottest real estate market in all of history, that might be enough to make it a good target for repositioning. But usually what they like to do is they like to make the place actually nicer by hiring contractors and putting some money in, so that way they can charge more rent. If you charge more rent, the building's making more money, or at least that's the theory. And the important thing is you don't get the operations people to do the contracting, or else nothing will be square, and it'll end up costing you more than you want. So the other problem about being from the internet like me is that I'm not going to fly there every single time there's a problem. So you're going to need boots on the ground, aka a local, somebody who can be there in an hour or something like that on a moment's notice. And then that way they are keeping an eye on the operations, making sure that it's actually being done properly, and they're not just giving you old photos or hiding their, cut corners or whatever. And same with the contractor, making sure that the capital expenditure actually is reflected on what's actually built. That's basically the day-to-day group of people. So if you want the apartment complex and you're a repositioner, you're going to have to grab the deal, and you're going to have to go to the bank and say, hey, lend me a whole whack of cash so I can take it over. And if you're not experienced and you try and get this whole team together and you get the property and you go to the financier and you say, hey, all right, lend me a bunch of money, you're in for a rude awakening, because they're going to say, who's your sponsor? And if you don't have a good answer for that, then you're not going to get a loan. If Elon Musk wants to buy a 450 unit apartment complex, he has to have somebody in the fold who already owns a similar asset, and there has to be a balance sheet that's equal to or greater than the amount of the loan. and then you also have to have some liquidity as well. So the sponsor is the person who already owns the similar asset. So those are the 6 parts of getting an apartment complex deal to work. So out of those 6 different roles, what best describes your role in co-GPing?
I think based on that description, probably the repositioner. And one of the things that really clicked for me when I started to study multifamily was because I come from the fitness industry where we operate fitness clubs. And what clicked for me versus single family was when I looked at multifamily, I realized, oh, this is a business. This is a business that operates with a certain level of profitability. And when you can come in and ultimately make it more profitable, then you increase its value, just like any other business. And that's what really appeals to me. So finding those opportunities to create value in a situation where it's currently underperforming relative to its potential.
Great, great. And so in your capacity, in your day job, your career, when I'm not going completely out of focus, I'm going to do this to see if I get focus. No, it's okay. Well, there's another trick. I can do this. Hi.
Wow.
Backups. So in your capacity in the fitness niche, you have to do a lot of marketing and that part of the equation. Yeah.
Well, yeah, I work mostly on the people side. There is a marketing, there's a strategy component, but I work with a lot of salespeople and leaders, general managers of locations. So I really work with them on their specific strategies to maximize sales for those clubs. So there is a marketing component to that, but we also have a separate marketing department. So it's mostly people, it's mostly coaching, helping people with strategy.
Okay, so would you be there for people as far as like the marketing component of operations, or perhaps maybe for the umbrella, the owner of multiple properties rather than I'm not sure what your syndication method is. Usually we end up having an LLC specifically for each property, and then there's the umbrella company that owns the parts in those different LLCs. I like that method because anybody who's involved, they can just check the title and say, it's like, oh yeah, there you go. I've owned this fraction of the LLC. It's not, a shell game, anything, that ridiculousness that you get in other situations. But that's something that you'd be willing to contribute some horsepower to, is some sort of marketing skill to the group.
Yeah, absolutely. If it's a single firm, let's say, that is acquiring multiple properties, to help with the marketing of that firm to ultimately attract investors and that type of thing. Yes, absolutely. That would be right in my wheelhouse.
Okay, awesome. So my next question then would be your buy box. So the number of units, like the unit count that you'd be looking at, and any geographical areas that you're basically that it's an easier decision for you than others. I'd call that your buy box. So what do you not mind telling us as far as what you're actively interested in looking at?
Okay, well, I look at 70 plus units. And I look specifically at high growth markets, Southeast. So a lot of the markets in the Southeast with us, North Carolina, South Carolina, Florida, Phoenix, I look at. And I also like parts of Nevada too, specifically Reno, Nevada. And that's mainly what I look for. And what's most important to me is really the sponsor, the lead sponsor, the operator, because I'm partnering with them. That's really the most important component to me, knowing that person, trust that, or that group, trusting them, the track record, and really feeling good about that partnership. That's what I prioritize, even more so at times than the market itself. But I still need to like the market, of course, and the opportunity itself.
Yeah, that makes perfect sense. So you answered one of the other questions, which is who's the perfect person for you to help? Of course, without breaking any SEC rules, so no enticing investors. So you're saying a sponsor. Sponsors are the people who you think you can help more than anybody else, really, right?
Yeah, absolutely. I mean, what I've found throughout this year and meeting different people is there's so many strong operators that are within their market, growing their business, and they've been able to grow it really organically, maybe starting off as more partnerships or owning things outright, then moving to syndications. They've been able to grow that organically with their own investor base, but then reach a point where they want to scale, and their reach of investors doesn't necessarily allow them to do that. So then being able to partner with other people who can bring in additional investors and be part of that GP and take on management responsibility, that I feel like can add a lot of value there when that partnership makes sense.
That's awesome. And so we met through one of these meetups and via LinkedIn, really, because at least that's how I found the meetups. So is that the best way to reach out to you, or do you have like a website or something that is better? Or
yeah, LinkedIn is good. Email is Brian, Brian, at maebarcapital.com. That's Maebar capital.com. My website is actually in development now. It'll probably be up in a couple of weeks. So that is one way people will be able to reach me. Those are probably the three best: LinkedIn, email, and website.
Awesome. Thank you very much for being here today. Now we got a nice clear idea of where you are and all that kind of stuff. Anybody in the audience who doesn't know me too well, my background is in e-commerce technology. Basically, I used to work for a company that it's the actual software for lead generation and keeping in touch with your contact list, but also the online funnel part. So a lot of these things like ActiveCampaign, MailChimp, or whatever, they handle all the drip campaigns, all the mass emailing, but they don't handle the actual sales side of it. And that was basically what got me to be successful in tech. And then I started working for some real estate companies. And then when I saw the numbers that they were pulling in, I'm going like, well, I appear to be on the wrong side of the right business. And so that's I ended up making the move over to multifamily because I knew that it was something that could actually be scaled, and there's enough money in the fold that we can make sure that somebody is taking care of those clogged toilets, and it's not me or the other very important people in the fold that have better things to do with their money than buy themselves a ticket to clean toilets for free. So that's where I'm at. Thank you very much again for joining us today on Chance Encounters. For you in the audience, in the internet there, please make sure you hit the subscribe button, because that means that YouTube will start paying for this instead of me. It's all on my own dime, but if you could hit like or subscribe or comment, that would really, really help. The subscribe button, just so you know what it does, it just means that my videos will be on your list of suggested videos. And if you're the type who just searches for whatever you want on YouTube instead of actually just browsing, then it won't impact you in any way, but it'll still be doing me a favor. So thank you for that. Thanks again, Brian, and you have a lovely week, okay?
Thanks, Dan. My pleasure.
All right, awesome.